Welcome back, folks. This is Madhav, and it's the market review video for 15th March 2020. We'll be discussing these five things in the market review video because all these five things are key factors in deciding the strength of the world economy. Now, first coming to US bonds. So, a strong US bond gives a strong dollar index, and a strong dollar index gives a strong gold. Whenever bonds increase, the bond yields fall and stock market indices take a hit. So we'll first look at the US bonds. So it's a 10-year government bond chart. We took out the last year's high and showed a strong rejection in the same. Now what I'm expecting is a pullback up to the mid level over up to 50% of this rally, and then again an up move. So why I'm expecting an up move is basically by looking at the bond yields. So this is the chart of the bond yields. Now if you see the bond yields, look at this. So the stage was set for the crash in October of 2018 itself, when we made a higher high on the bond yields, but we failed to make a lower low on the US bonds. Okay. Now, when bond yields make a higher high, we should expect a lower low in bonds, but that did not happen because the bonds were strengthening. There was buying going on in the bonds. Now, firstly, because the both of these, so the yields are at an all-time low and the bonds are at an all-time high. So how much higher can the bonds go, we cannot predict, but when will it go up? So when we come above this high once again, it will move further up, and the yields, once they break back below this low of 1.35, we'll again see a down move on the same. Currently what I'm expecting is, I don't know how much the bond yields can move up. They can come up to this level, they can come up in this zone, and they can fall back, or they can make a higher high over here and show a strong rejection for a short. Accordingly, we'll place our bets on the US 10. I'm not expecting these lows to be taken out. I'm not expecting a lower low, and even if we take out these lows, I'd like to see a strong rejection in the upward direction. Confirmation, once we go above this high, we'll get a confirmation that the government bonds are turning bullish. This does mean that I am still expecting a further fall in the indices. Nifty, you see this gap down last week. I would like to see this gap filled up, make a pullback up to 11,400 and then show a strong rejection. So what happened in the 2008 crisis was a similar thing. After a strong down move, we saw consolidation for the next 2 to 3 months, and then again a strong down move. Same thing over here. I want to see an up move. I want to see a down move over in the bonds, so that the markets, they come up to this level, and then we see a rejection. Okay. Now, coming to gold, if the markets are gonna fall, ideally gold should rise, but this was not the case that happened back in 2008. See, this is where the crash happened in 2008. Along with the falling markets, people lost interest in gold. So again, the same situation might arise. What I'm expecting is, I want gold to touch 1800 levels. Now when will this be possible? This is the H4 chart of gold. I'd like gold to close above this level, above 1600. Once it closes above 1600, we can take longs, and once we take longs, I would not expect it to break the yearly low again. If it is still breaking the yearly low, expect gold to reach 1300, 1350 to be precise. Now one more thing that I saw, one more divergence that I saw in the markets was in the Indian markets we were making a lower low. Okay, you can see a lower low over here, but in the US markets, in the SPX, we are still making a higher low. So this is not something that I'd like to say, because even the German index is making a lower low. So I'm still expecting the SPX to make a lower low. Better than shorting Nifty, I would prefer to short SPX in this case. So if US government bonds are gonna rise, if these government bonds are gonna rise, dollar should also give a positive sign, which it is giving right now. Okay, I am expecting this yearly high to be taken off, which is 100, and we can also see some more upside in dollar. Saw strong rejection after taking the yearly lows. So this is one more correlation that I'm seeing right now. A positive US dollar along with a positive government bond will decrease the yields, thus making the indices fall, and gold rising on the same scenario. So that's all for this video. See you guys in the next video. Everyone be safe and take care of your loved ones. Thank you very much. Bye bye.